Hello, it's Hans here from BrokerSite. I'd like to explore with you the impact of you achieving a very modest one loan per week business. I'd like to go behind the curtain and have a look at how to do it and the implications that you could look forward to. And let me say that after you've settled in and completed your initial studies, short course and stuff, and you feel comfortable, it's time to market yourself. And whilst in our teachings we will share with you dozens of different strategies that you could consider, the number one proven strategy globally is that of forming strategic partnerships, having partners out there who steer clients to you on a regular basis. And some of the obvious potential partners include the real estate agents and builders and accountants and so on. Now, we understand that in the early days it might be a little intimidating for you to go to a local accountant or a lawyer when you're first starting out. So the area we recommend you focus on is your peer level, which is the real estate salesperson within an agency. We know that highly likely the agency already has some relationships in place for finance. We also know that if they're part of a franchise chain, it's highly probable they actually own their own finance division, the group. But we've never yet seen it compulsory for the real estate salesperson to have to use these alliances. On the contrary, actually, you'll discover for yourself that, like you, the real estate salesperson is encouraged to also form relationships and networks that could help expand their business. Now, one of the other reasons why you'd be a popular choice for them is that we equip you with a whole array of ebooks and information that you can dispense to your clients. You might be able to see these are the covers, but they include areas of property strategies, negative gearing, asset protection trust, tax answers, positive cash flow, because we're also financial planners and accountants. How to pay off your home early, do your own development, renovations, and so on and so on. So a client might be steered to you because not only can you handle the financing, you might be a great source of information and education. Now, many advocate that you shouldn't share your commission. It cheapens your service. We hear that, and we are in that chorus. But we also understand that when you're brand new, you don't really have much really to offer in terms of track record or evidence of service. So maybe just to get some traction into your business, it might make sense for you to be making your relationship propositions commercial in nature. And I just want to have a look at this. If you were prepared to offer 50-50 of your upfront commissions, it's very unheard of. The real estate agents have never heard of this before in most instances. But if you're prepared to offer them 50% of your upfront commission for them to steer a client to you, you'll do all the work. That potentially could earn the real estate agent $1,000. Plus, think about it from their perspective, the financing of the home they're trying to sell is within their network. It's within their control almost because you're handling it for them. I mean, the question we have to ask ourselves is, would there be people out there who take you up on this type of offer? And I'm hoping you're sitting back saying, absolutely nothing surer that when I'm ready and I go out there, particularly if I get taught how to do it, but when I get out there and talk to people and say, let's have a cup of coffee in a 50-50 little partnership, you're bound to get some people. So here's my challenge. Whether it's one only relationship, 2 or 5 or 10, I don't care. But what I care about for you is that there's enough relationships that ensure for you a one loan a week business that you can count on. Now, a one loan a week business, I just want to drill through and have a look at this. This is a little case study. One loan a week business has a time commitment directly associated with that loan of between 3 and 5 hours for the loan. Not in the first week, but over time. 3 to 5 hours worth of contribution for that one loan. You're bound to spend a few more hours talking with prospects that may not move forward. So you might spend half an hour here, after they're there. I suggest to you that certainly, and we've got plenty of examples of this, a one loan a week business can be maintained and run with a 10-hour-a-week commitment. So if you're a stay-at-home mum, or you just want a change of a sea change in your life, or you're semi-retiring, or you want to play more golf, or want to get off the corporate treadmill, whatever the motivation, this can be done and built up, starting off very part-time. I also assume in this example that 50% of the commissions do indeed go to a third party. So, in summary, one loan a week where 50% of it's paid out to your partners would still retain for you around $45,000 based on a fairly standard banks type commission. $45,000 a year of income. Now, after 1 year in the business of writing one loan per week, then you would have, after 1 year, now built up to 50 loans. And you will discover that in most instances, you'll be paid a trailing commission in addition to your upfront commission, which we don't share, by the way. That's yours. The trailing commission, and it's around about $500 a year for a standard type loan. So having 50 loans in your loan book will have built up over the year to now being worth $25,000 a year. So when you add that to the upfront commission, you now have a little enterprise that's generating $70,000 a year, and all the clients are coming to you because you're paying partners to send them to you. You get paid this trailing commission that you generate in year one's loans, again in year two. In fact, in most instances, you get paid for the life of the loan. If it's 7 years, 10 years, or 25 years, or 3 years, it doesn't matter. You still get paid based on the balance. There's a few considerations. But in essence, after 2 years in the business, you now have 100 loans in your book, and now those 100 loans are paying a residual income of $50,000 a year, or a trailing income of $50,000 a year. When added to your upfront commissions, because you're still in business servicing clients, you're now $95,000 a year. And finally, I just pull up here 3 years, you'd have 150 clients, and it's paying another $25,000. Now it's grown to $75,000 a year plus your upfronts. You're still within this 10-hour time frame, but now you're on $120,000 a year in a period of time that is less than most standard university degrees. So you're doing a study or a course, or you're building your business, and in under the time it takes for you to get a degree, you now have built up this business that's generating a 6-digit income. And I don't know about you, but a lot of people out there could almost survive on that sort of income. But then add year 4 and 5 and so on, and let it build and build and build. Hey, 10 out, do 2 a week. We got brokers, you'll meet them, who do 3 a week, every week, week in, week out. And certainly 2 a week. So, but you know, this is a 1 loan a week scenario. Now, in one of our other videos on YouTube, and if you look at our station, youtube.com/broker site, it talks about buying a loan book. And in the reverse of that, as you build your business, then you have a capacity to sell your business. You sell a loan book, someone's got to sell a loan book in order for one to buy a loan book. And we talk about the asset value being a ratio of a little over 2 to 1, meaning for every $1 of annual trailing commission, the purchase price or the asset value of that is $2 or a little bit more than $2. So let's call it $2. So after 1 year, and you now have built 50 loans, and it's generating $25,000 a year. For whatever reason you wanted out and do something else, you could sell that little business for around $50,000. And after year 2, 100, 150. Not unusual for us to look at transactions, because we buy loan books too. Several hundreds of thousands, 800,000, 1.2 million. Depends on the size of the book and the underlying clients. So, you know, and you can do this for virtually no cost, no startup cost. It's just sweat equity. The study, you need to comply with a few things, build your business, learn your craft, and get out there and do it. And this kind of concludes my message to you, and I just want to finish off by saying to you the words of Napoleon, that ability is of little account without opportunity. Here is an opportunity. Talk soon.